Okay, so 98%. A 98% loan-to-value mortgage.
Yeah.
I mean, seeing that from a major high street bank, it feels a little unreal, doesn't it?
Completely. A few years ago, that was unthinkable. Sort of triggers those, 2008 alarm bells for a lot of people.
Right. And that's exactly what we're digging into today. We're looking at the London Property Digest's analysis of this new Santander product.
My first mortgage.
Exactly. And the big question is this a return to reckless lending? Or is it actually a really smart, targeted solution to a problem?
Well, to figure that out, you have to look at the problem they think they're solving.
And it's not what most people assume, is it? It's not about monthly
It's
affordability.
not at all. Their data shows the real barrier to entry is just accessibility. It's the deposit.
The classic rent trap. You see it all the time. Someone's paying, say, $2,000 a month in rent, which could easily cover a mortgage.
Easily.
But because that rent is so high, they can't physically save the, 50 or 60,000 pound lump sum they need for a normal deposit.
That's the disconnect. And that's what Santander is trying to bridge here. With this product, you can borrow up to 98%.
And the minimum deposit is just 10,000 pounds.
Just 10,000, which, it's still a lot of money, but it's a completely different world from 50,000.
It changes the whole game. Santander thinks this could shave an average of 4 years off the time it takes to save.
And that's huge. Now, we've seen niche products before, right? Skipton had a 100% mortgage. Barclays has its family assist stuff.
But this is Santander.
This is Santander. They're a giant. When they make a move like this, it puts pressure on everyone else. It signals that the big players are getting comfortable with this kind of risk again.
Okay, but should we be comfortable with it? I mean, a 2% deposit leaves almost zero room for error. A tiny dip in house prices, and you're immediately in negative equity.
That's the fear. That is absolutely the number one risk. But this is where the fine print gets really, really interesting. This isn't a free-for-all.
It's fenced in.
Very tightly. I'd say it's one of the most constrained products I've seen in years.
I was looking at the rules. No Northern Ireland. Loan capped at 500,000 pounds, and a pretty strict income cap, 4.45 times your salary.
Right.
But the one that jumped out at me, no flats.
Houses only.
That feels aggressive. Surely most first-time buyers in or near a city are looking at flats.
You'd think so. But from a lender's point of view, it tells you everything about how they see risk. Flats can have issues with service charges, leaseholds, cladding.
They're just less stable as an asset.
Exactly.
Yeah.
Santander is basically saying, we'll bet on you, the borrower, but we won't bet on an apartment as the collateral.
There's another safety rail, too, isn't there? The
Yeah.
5-year fixed rate. You're locked in.
Yeah, and that's the genius of the risk management. You have to take a 5-year fix, currently at about 5.19%.
So no interest rate shocks in the short term.
Correct. But more importantly, over those 5 years, you are consistently chipping away at that loan. By the time you're ready to remortgage, you've built up a natural equity buffer.
It forces you to get into a safer loan-to-value position before they let you go.
It's a controlled expansion of risk.
Okay, so let's play this out for someone listening. Given all these rules, the price cap, the no flats thing, who actually wins here? Who is this for?
Well, it's pretty clear it's not for central London. You can't find a freehold house for under £500,000 in Zone 1 or 2.
So it pushes demand outwards. This is a commuter belt product.
Almost exclusively. It's for outer London, it's for the surrounding towns, and it also it reinforces a trend we've been seeing for a while now.
The gap between houses and flats.
Yes. This product is going to pour fuel on the market for houses while basically leaving the flat market out in the cold. It feels like innovation is actively discriminating against apartments.
So to sum it all up, this isn't a return to the subprime boom.
No. It's a very specific key designed to unlock a very specific door.
A door for buyers who are willing to move further out and only buy a house.
It's a ladder for the suburbs, not the city.
All right, before we wrap up, here's a final thought I want to leave you with. We always talk about just getting on the ladder, right? Doesn't matter what you buy, just get on. But if one of the UK's biggest banks is willing to back a 98% loan on a house, but won't even consider the same terms for a flat, what does it really tell you about the long-term safety of your investment if you buy an apartment?
That is the big question, isn't it?